Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be focused on, as the main theme of the video, to cover a question which seems to be on many people's mind now that we're in the final year where we expect a blow off top. And the anxiety that a lot of people have is they don't want to miss the top of the bull market. And what I want to do today is to look at the larger time frame by going through the previous cycles, why, based on the historical perspective, why you shouldn't miss near the top of the bull market. Now we know when nobody can get the exact top, but certainly you may well get a second bite of the cherry based on the last three cycles of the charts. And as per usual, I'll go through the 60-day cycle as well as the wider markets and what's going on in the news. So if that sounds interesting, then you know what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. Okay, we're going to go on straight to the main theme of the video, and that is to cover the larger time frames to give us some sort of an idea, a clue, and a guidance as to what may well happen towards the end of the bull market. Now, our expectation here is that the market will end around about anywhere between September and December 2025. So we've got some way to go, but there are two candles in every 4-year cycle which have given us a clue as to why we shouldn't really miss the top of the bull market. And those candles are on the 6-month chart. So what we've got here is the 6-month chart on all of the cycles so far. So what I want to do a deep dive today is to look at the tops of the 6-month charts at the end of the bull market. So this was the 2013, and the two 6-monthly candles are these two here. And then the second one was these two. And then the third one, the last cycle in 2021, were these two. And of course, this is where we're at. And what we're really hoping for is that this particular pattern repeats in the current cycle. So let's have a look at these three cycles in terms of what I mean, why you shouldn't really miss the top of the bull market. And while nobody can get the exact top, there is a very good way of getting very near the top and not missing out on the majority of the actual moves. So going back to the first cycle here, in 2013, this was the top of the bull market. And what I want to do is to have a look at a measure of the tops of these 6-month candles. So what we've seen so far is that in the first cycle, the 6-month candle following it nearly came to match the top of the bull market. What we'll see here is that either the 6-month candle before or the one after will give you a second bite of the cherry. So if I take these lines away, I'll do a measure for you and then you'll see exactly what I mean. So this was the actual top here. And if we measure from that top to the next top of the 6-month candle, that was a 17% fall. So if you missed the top of the bull market here, you had a second bite of the cherry with about a 17 to 20% fall there. So you would still have got the majority of the move. Obviously in 2013, nobody knew that the next candles either side of the actual top were going to give you this second opportunity. But now that we have that in hindsight, we need to utilize all the information as best we can. So this was the first cycle. Then in 2017, this was the second cycle, and the same thing happened one more time. We topped out at the end of 2017, but the next candle came up to virtually the same price. So if we do a measure there from the 19,800, which was the top, to the next candle, that was only a 13% difference between the two. So again, you got the second bite of the cherry if you missed the first top. And in the last cycle, the 6-month candle came before the actual top. So we got the actual top here at 69,000, but that was the double top from the previous 6-month top here at 64,000. And the difference between the two, from the top here to the top at 64,000, was just 6%. So even if you missed this particular top, you would have got 6% extra here if you'd have got the second top. Now everybody knows that the 69,000 was a very difficult top to get, and not many people got that. The difference between the two tops gives you a second bite of the cherry. So how does this play out in the current cycle? That's what we want to know, now that we've got the historical basis and the benefit of hindsight to give us some sort of a clue and a guidance as to what may well happen in this cycle. Okay, so this is where we are currently. This 6-month candle started in January 2025. And what we need to do is to keep an eye on this particular candle. But not only that, what we need to do is to keep an eye out on the next 6-month candle as well as the next one after that. So based on what's happened in the past, we know that this current 6-month candle and the next candle, which we're expecting the top, are going to be very similar in terms of their tops. So we need to keep an eye on this particular candle in terms of how far up it actually comes. So if it comes up to 150,000, and with the Bexit indicators that we've got, if the pi cycle hasn't crossed by that time, then the probability is that the next 6-month candle that takes us to December, in between that point, we should come back at least to the top of this current 6-month candle, which finishes at the end of June. So the next 6-month candle from July to December, based on what's happened in the past, should come up to at least to the top of the current 6-month candle, if not surpassing that. So what this really provides is an adjunct to the Bexit indicators. And every little bit helps to give us guidance that we don't miss the top of the bull market. And even if we do, then history tells us that we will have another bite of the cherry. So in conclusion, we have the Bexit indicators, which are going to give us a very good guidelines as to exactly where we are in the cycle and where we're about to top out. But we also have these other added value historical perspectives, leaves a trail and a track of what Bitcoin has done in the past in order to help us safely navigate towards the end of this bull market. And while we're here, if we have a look at the pi cycle, we've seen every cross of the peaks have been marked by the cross of the pi cycle. So these were the first 3 peaks of the first cycle. This was the peak of the 2017 bull market here. The cross here at 64,000 was the first top. And currently you can see quite clearly that the red line and the green lines of the pi cycle are still yet to cross. So we are still some way from the top of the bull market. And now obviously when we look at the 6-month candle, the current candle finishes in June, so if we keep an eye on that and these 2 lines haven't crossed, then the probability is that the next 6 months from July to December are more likely to be the place during which the lines will cross. And then we'll know that the current 6-month candle will more than likely be surpassed by the next 6-month candle. So once again, it just gives us more information towards the end, and it can reassure us that even the tops of the 6-month candles are not going to be too far away. So you shouldn't really miss more than 10-15% of the top of the market. And the way Bitcoin finishes off at the end of the bull market is very similar to what happens with the Bitcoin miners as well. And I just want to bring you some relationship between the Bitcoin miners and Bitcoin in terms of the tops of the bull markets. So if we just look at Marathon Digital Holdings, like Bitcoin made a top in April 2021, that was the first top. And then in November 2021, it made a second top. So once again, you can see the highs of these 2 candles is not that far apart. And if we have a look at CleanSpark, it also had 2 tops, and their top was slightly different. The first top was in January 2021, and then the second top was in November 2021. But you can see, again, there's not a big difference between the 2. So the markets do give a second bite of the cherry most of the time. So although we only got a proper second top in the last cycle with Bitcoin, the previous 2 cycles in 2013 and 2017, while they weren't technically double tops, but we did actually get 2 tops which were very similar to each other. Okay, if we have a look at what's going on in the news, and what we were really waiting for was at the inauguration for the new administration to give us some guidelines in terms of what their thinking is, what they want to do with crypto. While we didn't get any guidance on the first day, at the back end of last week, we did get this particular order from the new administration, which is setting up a working group to draft new regulations and to explore the national stockpile. So this is where we're at. No decision has been made to make Bitcoin a reserve currency, but we are at the beginning of a decision that may well lead to that. So when we have a look at the charts, we'll see how this particular news has now played out in terms of the price action for Bitcoin. And if we have a look at the liquidation heat map, this has been very accurate in predicting the range of the Bitcoin price from the leverage players point of view. And that is that the lower range at the moment is at around about 98,000. And you can see the price has come back and taken out the leverage players stops at that point at 98,000. And at the top range, the yellow line where most of the leverage players stops are is at 103,000. So this is the range that you would be expecting in the coming days. And we may well have a little bit more to go to the downside here as we look in the charts a little bit later on. And if we have a look at the ETF overview to see exactly what's happening with the ETFs in terms of their asset inflows and outflows, then the BlackRock ETF, IBIT, we've had over 12,500 Bitcoins going into IBIT. Okay, if we have a look at the wider markets and start off with the dollar, the DXY, and what we've seen so far has been a very big move since October of the dollar defying all logic in terms of going as high as it's been, but it looks like there's a turnaround taking place currently. There was a sign that we were going to get rejected at this very strong resistance point here, but it managed to have a second leg to the upside. And what we're getting is another weakness in the dollar here, and are currently retesting that old resistance as support. So it has a decision to make whether it wants to go to the lower side or whether it wants to go back up again. But when we look at the lower time frame, the daily time frame, that may well be giving us a clue as to what the dollar is going to do. So this is the neckline here at 107, and so far we're getting a rundown all the way down to that strong resistance now turning into support. However, as we can see with the current candle here on Monday, we're getting a bearish outlook for this candle so far. So it looks like it wants to break down much further. So let's see where it goes. But there's certainly weakness in the dollar after a sterling move to the upside. And what that should do is to give encouragement for the wider markets to have a run up during 2025. And that weakness has actually played out on the SPX at the moment. And last Monday, this is where we were at. And we were expecting a move back up into the end of the 60-day cycle here. Now, it looked like with a higher probability that this was going to be a left translated cycle where the price after the midpoint was going to be less than the high of the price before the midpoint. But as we can see here now, we've actually made another right translated cycle where the price has gone higher than the price before the midpoint. But as we're approaching the end of the cycle, we can expect some sort of a fall into that. So the next period here, I would expect some sort of a fall back towards these levels here at about 6,000. And of course, the weakness of the dollar has allowed gold to run up and break through this symmetrical triangle that we've been looking at for the last few months. So we've got into this symmetrical triangle, and the narrative we had was that the upper end of the trend line here, that with this being a continuation pattern, we would expect it to break to the upside. And this is exactly what it's done here so far. And with the RSI looking as though there's plenty of room for it to go much to the upside. So this has a lot more to go for the upside during 2025. Okay, if we move on to the 60-day cycle for Bitcoin, the narrative here was quite clearly when we got the printing of this long-legged doji candle, the top of which was at 104,000, the low of that was 92,000. And after a big move that we've had from 49,000 up to the 108,000 here, that was a 120% move to the upside. So when you get a long-legged doji candle at the top of a very strong trend, it's giving us a guidance and a clue. And this is how we need to read into these charts, because they're always leaving a track from which we can always elicit some information in terms of what the market wants to do. And this particular candle, this long-legged doji candle, which we call the Harry Potter candle, because what it does is to cast a spell with its wand for the subsequent candles to be contained within the top and the bottom of that long-legged doji candle. And this is what's happened over the last few months. And in terms of the cycles, we bottomed out here on the 30th of December on day 56 of the previous cycle. So currently, today being Monday, the 27th of January, we are on day 28. And the white line here, as you can see, is the midpoint. And this was our expectation that as we're coming to the midpoint, and the inauguration, which was this orange line here, that we were going to get a run into the orange line, i.e. the inauguration, and for this to be a sell the news event, which fitted in very nicely for the decline into the midpoint here. And this is exactly what we're now getting, a decline here into the midpoint before we turn around, anywhere around here, back towards running into the end of the cycle on the 28th of February. So far, the narrative of the consolidation from this point onwards has actually been playing out. So the question is, where do we go from here? And the question people are asking is, how far low can this go here? And if you're a member of the Wisdom Bites private member section, you'll know that over the last couple of weeks, we've been talking about a couple of prices where the market will more than likely come down after the inauguration being in sell the news event. And we also got a sign last Friday on the daily chart of the Bitcoin miners, which was giving us a shooting star pattern at the top of the trend. So this was a bearish pressure building up for this week here. So this was the market update that we did on Friday. And the two prices that we've been talking about have been 98,000 and 96,000. So what we've been expecting in the private member section is that the mid-cycle decline we're expecting for Bitcoins to pull back to 96,000. And on Friday, we got this confirmation from this shooting candle here with Bitcoin. And also on the Bitcoin miners, that was confirmed because they also had bearish candles ending the session on Friday. So at the time, the price for Bitcoin was 105,000. Currently, we've come down to around about 97,000. So what we've been doing with Bitcoin over the last few weeks is that we formed a symmetrical triangle at the top of this trend here. And from the bottom, if you want to know what the likely prices are from where we could possibly bounce back from, is if you do the Fibonacci retracement from the bottom here to the top, which was at 109,300, you'll see that the first target was the 50% Fibonacci retracement at 98,000. And this has just come down in the last few hours. So that was the first target. And the second target is the 96,000, which is the 61.8 Fibonacci retracement. So this is where I would expect with a higher probability for it to bounce back. So in terms of the cycles, what we're really expecting here is that we did have a big run up here into the inauguration. So obviously after that, we would expect some period of consolidation. And the fact that we're coming into the mid-cycle decline means there's added pressure to come to the downside, as well as we've had the 120% move up to the 108,000. So for those various reasons, the narrative has always been that we're going to consolidate right up to the end of February here. And this is where we have to make a decision. Is this consolidation going to be enough so that from February to April in the next cycle, we actually break up and finally conquer the 110,000 at this point? And what we have to do is just be patient to see how these candles develop and the price action up to the end of February, and then we'll have a much better idea in terms of where we go with Bitcoin. And of course, we do have this very strong support line at 92,000. In the worst case scenario, it may well be that we come back all the way down to the 92,000 before making the upturn. However, I'm not expecting to break below the 92,000 now because of what's developed in the past few weeks. Because when you look back here, what we got with this dragonfly doji candle at the bottom of a trend is that there is a very strong pressure for buying up at these levels here. So this is actually supporting this 92,000 in a very admirable way. So the likelihood is, the probability is that we shouldn't really fall anywhere below the 92,000. We could obviously wick down like we did there as a bear trap, but certainly this should provide a very strong support going forward into the next cycle. Okay, there was one thing I wanted to address just to add value to everybody in terms of looking at the bigger picture, because I have noticed, not just on my channel, but on many other channels that cover the Bitcoin miners, is that people seem to have a skewed view about the Bitcoin miners. And the best thing to do is to always look at the full bigger picture. And the reason why I say that is that as per this quotation from H. Jackson Brown Jr., there is nothing more expensive than a missed opportunity. Now, I'm not saying that you should all get into Bitcoin miners. Everybody has their own decision to make. But the best way is to make an informed decision, i.e. based on true information and not the bias that some people may want to actually peddle out there. So let me just give you the full true picture of what's happened with the Bitcoin miners. So this is the actual picture based on the facts in the charts and what's happened from the end of 2022, where the bull market started, and the current picture here to the end of 2024. So if we go back to 2023 here, where the bull market really started, so the beginning of 2023, so these figures here are for the whole of 2023. This is Bitcoin here at 153%. It went from 16,600 from the 1st of January to the end of December at 42,000. So that was a 153% increase in Bitcoin. When you compare that to the Bitcoin miners, you can see the figures for yourself here. And what we do in the Bitcoin miner section is that we cover these major miners here. And some of these are part of our portfolio. But you can see with these figures here, with Bitcoin going up by 150% during 2023, the Bitcoin miners had a leverage play on Bitcoin of anywhere around 4 or 5 here, as you can see with these figures. So in 2023, the Bitcoin miners absolutely outperformed the Bitcoin price. However, that picture changed. And this is what most people, because it's the recent year, i.e. last year, and the danger is that you may miss a wonderful opportunity with the Bitcoin miners, and that may well prove quite expensive. So in 2024, what we saw here was Bitcoin certainly outperformed most of the Bitcoin miners. So the Bitcoin price went up from 42,000 at the beginning of 2024 to 93,390 at the end of 2024. And as we can see with some of the miners, as we can see here in the red, Bitcoin outperformed these 4, especially Marathon, CleanSpark, Riot, and Bitfarms. And there were only 3 here, TeraWulf, MicroStrategy, and Core Scientific that actually outperformed Bitcoin itself. But apart from these three, Bitcoin certainly outperformed all of the rest of the miners here. So if you just concentrate on 2024 and these four miners, then you're going to get a very biased view about the performance of the Bitcoin miners. So this particular table now becomes much more relevant, i.e. this is the full cycle view between the end of 2022 and the end of 2024. So this is the full cycle view up to last December. And we can see quite clearly that Bitcoin has gone up by 463%, up to 93,000. Obviously, it's gone up a bit more than that, but we are comparing up to the last day of December last year. And we can see quite clearly here that all of the other miners, some of them like Cypher and Iris Energy and TeraWulf, those have certainly outperformed Bitcoin by going above the 460%, while Marathon and CleanSpark in the whole of the cycle has performed nearly as well as Bitcoin, and Riot and Bitfarms have much underperformed that. So this is the actual true picture. So on balance, what we can see is that they're very much similar to each other up to the end of 2024. And what happens in 2025, nobody really knows. All we've got is the previous cycles to look at. So if we have a look at the previous cycles, what's happened in the past may well give us a good guidelines as to what may well happen during 2025. So if we have a look at Marathon Digital Holdings, before we had this parabolic move in 2021, you can see quite clearly the Bitcoin miners in the form of Marathon here had a big rundown before the big move came. CleanSpark, exactly the same, a big rundown before the big move came. Riot Platforms, a big move down before the blow off top. So you can see quite clearly that nobody can guarantee the increase in the price here, but certainly if you were down here, you would have a very negative view of the Bitcoin miners. And when you're seeing this price action, then we get conditioned into thinking that this is what's going to happen. But the market has a different viewpoint. And currently what we've got with the Bitcoin miners is that you can see from the table that I've just shown you that in 2023, we had this big move here, which was greater than Bitcoin. And while the Bitcoin miners consolidated in 2024, the Bitcoin price went up much further. So there was underperformance from the Bitcoin miners. And we are in the final phase of the Bitcoin 4-year cycle. And the question is really, everybody has to make up their own mind whether the Bitcoin miners are going to do this as the Bitcoin price goes up to its natural conclusion towards the end of this year. And everybody can make up their own minds, but I thought it was very important to get the full bigger picture view and to look at the exact facts rather than have a skewed picture from those people who really don't know what they're talking about, making negative comments about the Bitcoin miners. And for those of you who are watching our trading portfolio that we've got on the Bitcoin miners private member section, this is currently where we're at the close of play last Friday. So we started off with a capital of 100,000 on January the 6th, 2023. So this was the beginning of the bull market. We got in right at the bottom, and this portfolio from 100,000 has grown to 552,222, which is a 552% increase. And our target at the end of this bull market is 5 million. And you may well think that's unachievable, and it may well be. We're very open, fluid and flexible here. But as you've seen with the Bitcoin miners, when you consider in the last cycle, Marathon Digital Holdings, from the end of the COVID situation, went up by 237x. So it went from a price down here of 35 cents all the way to $83. So you can see quite clearly, although we only have one data point, but we also know that the charts give us a very good guidance as to what may happen in the future. So while we may not get 237x, certainly the possibility of 5, 10, 15x is certainly on the table. So currently at the moment, our target is $5 million from a start of $100,000. From the start at $100,000. And as I've said many times before, even if it comes at 4 million or 3 million or 2 million, it really doesn't matter. You've just got to accept what the market gives you at the end. If you try to hold out for the exact amount that you've got in your mind, then you're really setting yourself up for disappointment. But it's always good to have a target in mind and then let the market play itself out. And for those who want to get out at the top of the market, then we just have to accept whatever the market gives you. If that's going to be 4 million or 3 million or 2 million, then that's absolutely fine by me, because then we go into the next cycle. Life doesn't stop at the end of this current cycle. And if you are interested in the Bitcoin miners, many of the members in the private member section, many of those are not invested in the Bitcoin miners. So many members are actually there because we do 2 videos per week, and some of them come for the analysis on Bitcoin because we do 2 extra videos for the Bitcoin miners members, because we do 2 extra videos for the Bitcoin miners, but we also cover the Bitcoin cycles. So in the private member section, we do cover Bitcoin in very much detail as we do in the Mondays videos. So whether you just want to follow our portfolio there, whether you want to invest in the Bitcoin miners, or whether you just want to watch extra videos on the analysis for Bitcoin, if you want to join us in the private member section, then all you have to do is that below all of my videos here, there's a join button here, as well as in the description box. So if you're on a handheld device, you may not see this join button here, but if you go into the description box, you'll see another join link here. So when you click on that, if you think that 2 extra videos and a market update every single day, Monday to Friday, at the end of the close of the trading sessions, if you think that's worth more than a coffee per week, then you'll have access to the membership tab here. We've been doing ratio trades from the beginning of 2024. So these are the profits and losses. The profits are in the blue, the losses are in the red, and you can see that well over 90% of success rate on these, and we've had over 25 trades since the beginning of 2024. And whenever there's an opportunity with the ratio trades, I leave them in the market updates on the message board before we execute those trades. Okay, I'm going to leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. And if you've got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.